So welcome everyone to PM and Sales Methodology Alignment presented by TopStep. What we'll be covering in our session today will be, why do you need to deal with alignment? What is a sales methodology versus a project methodology? And where does that overlap happen, which is usually around the proposal process. And how much of that proposal process can be used both by sales and by project management. Then we'll turn our attention to the OpenAir system and show you about how you can introduce that overlap into OpenAir to get more complete reporting within your organization. So why is methodology alignment important when we're talking sales methodology and project methodology? For many of you out there, you have a sales system that you're using, a CRM system, such as NetSuite, Salesforce, Microsoft CRM, and all of your opportunities are being tracked within that system. Project management is usually a services organization. Project managers deal with how to manage the delivery of a project. So they get the project once it's sold and deliver it with the customer according to what's been scoped for work. However, in order for the sales team to be able to close a deal, there has to be a scoping of effort. And for a project manager to deliver a project, there has to be a scope of effort. And that's really where the overlap ends, where the scoping effort proposal process crosses the two worlds, and tracking information separately in two different systems gives you an opportunity to introduce integration and tracking of information in a more consistent handoff type approach. For many of you, your sales teams are following some type of sales methodology, and a common practice is called the sales funnel, where you identify leads through a series of opportunities. It could be conferences where you exchange business cards, luncheons, cold calling, reference information, all types of ways to meet potential customers out in the field. And then as those leads are qualified and refined, you scope down, or you refine the number of items that you're tracking in a smaller and smaller concise group until you actually have the sale closed and the sales order is booked from the sales team. So as you look at the first area, the lead identification, like I said, this is where a lead could come from anywhere. A lead could come from cold calls, the conferences, people who attended conferences, and following up with those individuals. At that point, you're really doing an introduction of the company and what the company offers to potential clients. There's really no project identified because there may not have been an actual conversation yet. It's really just potential leads, potential follow-ups. There's a very low probability that this type of deal will close because there's little known about the environment, the customer, the sponsors, the needs at that point. The next level down into the funnel, you start dropping off identification of leads and qualifying the leads that are more realistic. This is where there may have been a potential conversation, there have been maybe a demo with a client to identify what your organization can do for a customer, can do for a prospect. And once a lead is qualified, this is where the company, your company, feels more secure in investing resources to be able to build out what that lead is going to be, follow up with the customer more often, and start identifying potentially where the lead is going to go, what kind of offering or activity. So there's really no project identified yet at this point. It's really just identifying, yes, this potential customer definitely wants to do something with us. Let's identify what we really can do for them. So now you get down into the opportunity identification, and this is where may have been 1 or 2 additional phone calls, and now pre-sales resources typically are getting involved with the customer to identify what is their requirements, what do they need, what is their business challenge. And from that identification is where you start to get an idea of what kind of work your organization will do with the customer. And if you get down to you get a feel for the project, starting to get a feel for what type of activities the services teams would be performing, working with the customer either through a product sale or a media sale or so forth. At this point, it's about a medium probability of closure for the deal. The scoping hasn't been done yet, pricing hasn't been done yet, maybe ballpark pricing has been discussed, but there's really no solid boundary around what it is that you want to propose to the customer at this point. So that leads us into the actual proposal, and the proposal is where you actually define the work that's going to be done. This is the project definition. And part of this proposal process should include a risk assessment. If your team's not doing a risk assessment, maybe consider it, and we'll talk about risk assessment a little bit. But it's a benefit to both your organization, the customer organization, and the project team who would be delivering it, because the risk assessment goes beyond things like, how are our products going to do, what are the dynamics of the team. It also gets into, does the customer have the right team? Does the customer have the technical capabilities to take over this project when we're done? How can we avoid any kind of customer satisfaction situations? So a robust risk assessment during the proposal process helps both the services team identify potential risk areas for delivering the project, as well as the sales team identifying risks that could potentially hinder the closure of the deal. Do you have the sponsor identified correctly in the organization, so forth and so on. So there's basic project identification from the proposal. And at this point, you've gotten to the point where you have requirements, you've discussed this with the customer, and probably to high probability of closure because you've gotten to the point where you've invested potentially large amounts of resources to develop a very in-depth proposal of what you will deliver to the customer. Then, of course, the last 2 stages are acceptance of the proposal, negotiation of pricing and effort, and then a closure of the opportunity that once the deal has been signed by the customer. So how does that compare to a project methodology? A project methodology starts off with a project life cycle with a beginning, a kickoff, a middle, and an end. That's a real basic life cycle. Some of you on the phone were probably thinking, well, geez, that's almost too basic. But everything has a start, a middle, and an end at least. And you may have a much more robust life cycle defined for your organization based on the type of work you do. Within the project life cycle, however, the delivery stage of the life cycle is really where methodology gets blown out according to how you have to deliver and make sure that you have a repeatable delivery process. So that's what I call delivery management. And the example here on the screen is like a 4D methodology where you define the work, design it, develop it, and then deliver the work. So that's what you do in the delivery. The prep is getting the team together, briefing them on what the proposal was, the customer situation, having a kickoff with the customer, and now delivery dives into the actual delivery methodology that you have as a company to follow best practices and make sure you have a complete delivery of success. And then, of course, the closure of the project. So the project life cycle actually is where the overlap with sales happens. And it's really the prep stage that I'm calling the overlap, because the prep stage is where you're briefing your team. As a project manager, you're briefing your team on what the proposal has in it, But ideally, you've been part of that proposal. You've been part of that proposal development. And if you've been involved in that proposal, then you have a much more in-depth and probably comfort factor with the project as it's being delivered. So that prep stage may include some pre-sales or proposal work. At the very latest, the prep stage is a handoff from sales that said they booked the project, and then they hand it over to the PM. In my opinion, that's almost too late in the cycle, because that handoff to from sales teams to services teams in many cases is difficult if the services teams haven't been involved to some extent, because there may have been a disconnect or communication gap with what was sold to the customer and then what the services team is expecting or can deliver to the customer. So the proposal process is ideally the place where the overlap happens, where sales is working with the services teams, potentially project managers, in developing that proposal. And really the proposal scope of what I've worked with companies to develop a proposal process usually starts with identifying what is the customer objective, gathering their requirements, which may or may not be done by services and may be done by pre-sales, but then the pre-sales teams are working with the services teams and the project managers to determine the delivery approach for those requirements. Once the delivery approach and the requirements are done, then you've got enough information to start scoping what the effort is going to be and what the project is going to be looking like. Identifying the types of resources you need, the staffing needs. Always, resource management is always a big impact within organizations, and the sooner you can get a feel for how many or what kind of people you need in some guesstimate time frame is always a benefit to be able to manage your resources and team. And then completing that risk assessment, identifying where potential shortfalls are within the organization, within the customer organization, within potentially the approach that's being delivered. Maybe budget is constraints, maybe the schedule has hard deadlines that can't be moved. All of those contribute to understanding how best to manage the project and also what the risk is to closing the deal. And of course, completing the proposal itself. So in the proposal process, project management can contribute to the proposal by identifying the delivery methodology, identifying the effort, scoping the effort, the timeline for the project, and the kind of resources that are needed, which of course may directly relate to the pricing of the engagement. So project management scopes the project, looks at it from a project, a timing, a delivery approach using their methodologies. And sales, of course, is going to be the one that handles the value statements of why this is best for the customer, the benefit and value add parts of the proposal, and probably the pricing as well, working with, of course, the finance team and negotiating with the customer. But I keep talking about the risk assessment, and the risk assessment is actually where both teams get involved. Sales, having worked with the customer, understands the customer environment, maybe the customer team, and is able to provide information that can be very critical to the success of closing the deal and delivering the project. And of course, the project manager is going to have a somewhat constant set of standard risks that they would evaluate against the project to make sure that something isn't a higher risk than normal, such as a hard deadline to meet the delivery of the project. So here's some key areas that I like to make sure that are considered as part of risk assessment. And some of those are customer team. What's the knowledge level of the customer as to not only what you're going to be delivering, but what they're getting, the technology that's being involved. Do they have a key team or key set of resources that are dedicated or committed to the success of the project, part of your team potentially? And is there a sponsor? Is there someone that is an escalation point within the customer to help resolve any conflicts or critical decisions that need to be made? Of course, you also have to turn the table and look at your team as well. the type of staffing needs, you can identify resources, potential resources that have to work together. Do you actually have to consider personality conflicts? What's their experience level? Do you have some junior resources and senior resources, a decent mix there to make sure it's, everything's compatible? Do you need some contractors? Can we get that identified in place, and have we used those contractors before? So there's, it's not necessarily money or schedule related, but, if you think about risks on perhaps some projects you've worked on, if you would have sort of sat back and thought about how will the team work within themselves and with the customer, maybe you would have chosen a different staffing model. The basic things that we want to make sure are clear in the risk assessment is, do we have a clear objective of what the customer is trying to achieve? If there's any kind of wavering on what the objective is, that may end up introducing scope creep and changing the direction of where the project's going. Do you have all the key requirements in place? Are they clear? Has there been any communication gaps, such as translation of "I meant this when I said that" type activity? In the technology area, for those of you who are dealing with more product-type deliveries, does the product support some of the key requirements that the customer is identifying? Is there a known gap? What's the commitment from the development team to close those gaps or to deliver enhanced functionality? Are you using a new tool or a new product for the very first time, and that's a risk that you have to understand potentially what happens if it fails? What happens if it doesn't achieve what we wanted it to do? How can we recover from that? The delivery process, of course, is a very key one in risk assessment, making sure that you have a clear change management or change order process in place, understanding how you're going to control scope, what's your methodology on how you're delivering it, which is part of the project definition, so to speak. And then the logistics, is everything going to be on-site or remote or a mix? What are the potential risks with doing a mix or a remote activities? Do you have a clear communication plan, weekly status calls, steering committees, escalation points, everything so that all parties are on the same page? So if you take a risk assessment and think of it as like a spreadsheet with sections in each of those topic areas, you can actually identify a low, medium, high type of scoring for each of those categories. And then what I usually see on risk assessments is each category is scored on an average, and then based on the overall risk assessment score of that scorecard, you can identify whether this deal has a high risk, it's a high risk deal, it's a medium risk deal, a low risk deal. And anything that's a high risk deal is really something that should be considered as a go, no-go decision. It's apparent that if there's been a lot of resources spent on the sales cycle to close the deal, and you get to this point where you do the risk assessment and it's still very, very high risk, it's hard to say, no, we're not going to do it. I understand that. But at the same time, if it's that high risk, should you invest more time to make it a lower risk activity, helping the customer maybe identify their team or clarifying requirements, or seeing if there's relief on deadlines? Because as a project manager, managing a high-risk deal means it may also have high visibility in the organization, and that's just a lot of pressure to be able to make sure that that is successful. So what are the challenges when you're dealing with the two different teams and the methodologies and potentially the two different systems that they're using? Sales are tracking opportunities within their CRM. They're doing pipeline reporting or opportunity sales funnel reporting from their CRM leads and the opportunities. And project managers would be working with OpenAir to manage the projects that they're delivering and reporting, what signed work is still outstanding to be delivered. But to be able to combine the reports, some of you have an integration between your sales and your OpenAir system, and you're doing combined report that way. But I'd like to see that, in the OpenAir system, project managers should be able to have early insight into what's coming as a project and not actually just wait until a project is signed and then put into OpenAir, have some kind of foresight so they can do some planning in the OpenAir system, and that proposal area is really the best way to do that. So there is a way within OpenAir, if you haven't already done something to this extent, to be able to start tracking proposals in OpenAir. And when I say proposals, I don't mean the documents themselves, but to identify the notion of what project is coming, even though it's in an immature state and it's still in the sales cycle. By identifying proposals within OpenAir at an earlier time frame, it gives the services teams and project management activity to be able to anticipate something coming. And the anticipation is not only from emails and word of mouth, it's actually physically showing up on reports as a reminder on a regular basis that an opportunity may close quickly. Sales, on the other hand, can keep the team up to date, the sales services team up to date by, as the proposal and the opportunity is maturing in the sales system, and integration between two systems can make sure that that updated information is pushed over to OpenAir on a regular basis. So both teams can have assurance that a handoff between sales and services may be more complete and avoid any risks in sort of information or knowledge, missing knowledge. So here's some thoughts on how to actually introduce the whole proposal to OpenAir. There's quite a few ideas that I'm going to show you here, and I've got some things set up in the sandbox that I'll switch into so I can show you real time. But probably the most simplistic one is with this module of OpenAir, introducing a new stage, a project stage, which represents proposals or projects that are not real projects yet. They're not signed by the customer or agreed upon by the customer. Like I said, this is the basic approach so that you have some place to put those projects and keep track of those projects in reports. It's very simple to do reporting by project stage, so you'd be able to filter those out or include those on reports that you're running on a regular basis. The other thing, though, is people may think, okay, well, a project comes in, but now the way I have my system set up, everyone can see every project. So, or if we start planning ahead of time and we put names against the project, people are going to see it on their timesheet, and it's not a real project. They shouldn't record time. So there's actually a couple of ways you can control time by using feature functionality or simply configuration options within the OpenAir system. One is the most basic filter set concept. So filter sets control data views, and data views are controlled by the clients and the projects and even the project stages that you're allowed to see. So one basic way of controlling time entry is to basically set up a filter set that does not allow people to see that proposal project stage. What that in turn allows you to do then is to either set that as a primary filter set for your time-only people, to turn on a feature called filter set module overrides, and be able to set that filter set on the timesheet and expense modules so that although they're in maybe the projects and the resources and they can see those things, when they go to their timesheet or go to create expense reports, they can't see those projects because they can't see that project stage when you're looking in those specific modules. Now, if you're not familiar with the filter set override function, it's something that if it's not turned on in your environment, you can email OpenAir support to activate it. But what it allows you to do is on the demographics form, all of us have this primary filter set. But below it, you'll have a new option that says filter set module overrides. And when you click on create or edit if something is set, you get the option to actually pick some other filter set to control access. So although I'm presenting this as part of the sales methodology, this is something you could do for anything. In the resources module, allow people to see all resources. but in the timesheet module, they can only see themselves, things like that. Okay. Another option, though, that you may not be aware of is the setup of some custom fields, and then you let OpenAir know that you've set up these custom fields, the OpenAir support know. And what that does is it invokes special functionality in the system to actually control project by project whether time and or expense is allowed to be entered on the project. So what you do is you create checkboxes. One's called allow time and one's called allow expenses. So the example on the screen here, you let OpenAir support field turned on, and they will set that in your configuration from an internal. Control allows you to do then is a form, the project form that has the name and the customer and the price. A new checkbox would show up called allow time. And what that does is when it's checked, the project is available for time entry. So according to what your rules are as far as people accessing the project, with this checked, they would be able to put time against the project if they're assigned or allocated or whatever. If it's unchecked, then project is not available for time entry, so it won't show up on timesheets. And the same type of functionality works also with allow expenses. And again, I'm talking in terms of the sales methodology, but you could also consider using this type of control for projects. Maybe you have an expense-only project and you don't want people to record time. You can use this type of functionality to prevent the project from being considered for time and have it be expense-only type activity. So now that we have a project stage that's allowing us to track these proposals, and we've got control to make sure that people don't accidentally or realistically have access to put time and expense on it, we've got some controls in place to do that. What else could I take advantage of in OpenAir to help with this proposal tracking? And one suggestion is repurposing the issues feature within the risk tracker. Some of you have used the issues form, but in many cases it's a form that's translated into a risk document, maybe a status report, maybe a subtask assignment type to-do list activity. But in this case, if you repurpose the issues to be a risk form, it allows you to build out the form to mimic the type of risks that you're tracking on a regular basis. So using the terminology overrides, you can rename all the issue-related feature functionality to risk. And then you can add new fields to it, such as I've added a couple fields like mitigation plan and contingency plan on the screenshot here, which are text areas so that I can more completely define what the risk is. Okay. So let me go into the system and I'll show you how we've got that set up here. So in the risk documents, I've identified stages for risks, what risks have been identified, what risks have already turned into an issue, so we're activating the contingency plan perhaps, and what risks have been closed because they've been fully avoided. And if I just create a new risk, you can see what the form would look like. So the date of the risk, and a general synopsis, categorization, or title of the risk. If I wanted to make someone an owner or control of it, what's the stage it's in? What kind of priority is this? What kind of impact would it have on my budget or my schedule? And of course, I could add more to this list as necessary. What kind of risk is this? Is this something related to the customer? Is it something related to how communication is being done or deliverables are being made? And then what's the probability that this risk will occur? If you have a high probability, high impact, high priority risk, that's something that should get a lot of attention for both a mitigation plan and a contingency plan in case that risk cannot be avoided. Okay. You could customize this with all kinds of feature functionality. the customizations that I've done on this particular example have been a combination of custom fields on the risk form with a mitigation plan text area and a contingency plan text area. And then I've actually reused or renamed many of the standard issue configuration elements to be risk elements. So under the terminology, when you scroll down to the area where the issue standard wording is, issue category, severity, and so forth, I've renamed those to be items that I would align with what a risk document should have in it. And these items here, since they're standard fields in OpenAir, are actually defined in one more place under Application Settings, Project Settings. And here's the categories line, the impacts line, the priorities, probabilities, and statuses line. And in each of these areas is where I've defined what the drop-downs look like. And the risk document can be anything that you want it to be as far as how many fields, what kind of fields are on there. You add the fields and then you use form permissions to sort of organize the form the way that you want. I've hidden many of the standard issue form fields because I don't need them in my risk document. They're not applicable. Okay. So you have risks identified, but what's another opportunity that you have? And this is really the benefit of using something called like a template or a template stage in the system. Because if it's a standard methodology, like the delivery methodology of the 4Ds or 5Ds or waterfall approaches that you may have, you probably have a standard set of tasks set up, phased tasks set up to take advantage of. The nice thing about using the issues form as risks is it also gives you the ability to basically set up a standard set of lists, perhaps against the risk assessment form that you're using in the proposal process. So there's a standard set of risks that are always associated with every project. And when you create your proposal project in OpenAir, either directly or through an integration, you can actually have that project copy function not only copy your standard methodology, but also to copy over that set of risks that go with the assessment. And maybe that becomes part of the proposal activity within your services team is as they're working on the proposal, they're creating the project, they're filling out the risk assessment through OpenAir risks, downloading that information and including it for review by the team itself. So the risk form allows you to use something to update and track a risk worksheet, so to speak. But because it actually is something that can be part of a template, you can copy over the same set of risks over and over again without having to recreate everything from scratch. And then, reporting is always the big thing, right? And project stage, by saying this is in the proposal stage, that definitely is a good definition of what to include or exclude on financial reports or staffing reports. Consider some other options, such as tracking the client and understanding if the client is actually a prospect or a client. Now, OpenAir does have the functionality to identify something as a prospect, but that's primarily to be worked within the opportunity module, something that is usually handled outside of OpenAir by a CRM system. So if you just set up a simple drop-down field that's part of the customer or the client record, that when the client comes in, you set that to client or prospect, that gives you a whole nother level of reporting to be able to do some dashboarding to show what kind of incoming revenue or forecast revenue is coming in that's a prospect because it's not signed work, or client work because you have actually signed client work to be done. And another grid, so let me just flip to a dashboard view here. And you'll be able to see just from this graph here, pipeline versus backlog, once it shows up. Just by simply adding this drop down to the definition of the client record, I'm able to get a lot more information because the green line here is pipeline work. These are proposals that are in signed yet, and that's being identified as a high volume of work, whereas I've still got quite a bit of client work to deliver as well. And that breaking information down into those two categories gives you insight into what's coming in and what's already being worked on. Another option for consideration is a feature called the allocation grid. A common practice in tracking or reporting financials related to an opportunity that is maturing is to basically report the value of that opportunity in something called a weighted value, meaning a $1 million opportunity that may have only a 10% chance of closing is really only valued at $100,000. Instead of including the $1 million on some kind of forecast report, sort of overinflates what kind of money is coming in. And as you refine the opportunity through the sales funnel, you usually increase the probability of close, which then adds more money to the forecast of the pipeline, and therefore you're sort of seeing the maturity of that sales funnel through a financial view. Well, the same can apply in the OpenAir system. So proposals that come in, it's a proposal. So a $1 million proposal does not necessarily mean you're going to get $1 million. There's still negotiation that has to happen, and a determination of how the project will be potentially started. So you may want to consider adding a weighted value in the reporting within your OpenAir system. And one of the easier ways to do that is this field called an allocation grid, because what it allows you to do is introduce a whole nother set of fields to be included on reports, essentially setting this percentage field. Now, what do I mean by that? Is if I go into a report, one of the fields that are going to be showing up are the allocation grid fields as well as the standard fields that I would include. So if you reference our advanced reporting webinar, we go into this in a bit more detail, but this allocation grid allows you to include a whole other set of already pre-computed values that are multiplied by the allocation grid percentage. And now you can actually add this total billing field and total billing. So when I add the weighted value, this is already computed, this revenue recognition is already computed value against the weighted value. So if it was $1 million in recognized revenue, it would be multiplied by whatever the allocation grid percentage is to reduce the amount of money in that revenue by the percent of what's added. So it saves you a step on those custom calculations that you may be using in doing reporting. So what are the process impacts when you do the methodology alignment? You've set OpenAir up to be able to track proposals, but one thing you have to understand is still the ownership of pieces and parts of that proposal. So if you set up an integration between your CRM system and OpenAir, that's one nice way that you can identify the auto creation or maybe the manual push of that opportunity into OpenAir when it's ready to be received and tracked within the services organization. However, you also want to take into consideration how much control that integration has. There potentially are quite a few updates going on in your sales system that you may not necessarily want those types of updates into OpenAir. You certainly don't want things like the sales system to potentially control what stage the project is in OpenAir, except for the time it first creates it. For initial creation, put it in the proposal stage, but if I move it to active or closed or whatever, don't try to reset it through the sales integration, as an example. What was helpful, though, is from the integration, if you have different types of projects that you're delivering, set up different templates in OpenAir. When you set up different templates in OpenAir, what that gives backwards into the sales system, what that gives a sales team the ability to do is identify what kind of opportunity is it. Is it going to be consulting only? Is it going to be development? Is it going to be, an advertisement or campaign? And by actually selecting what kind of services opportunity it may be, the integration then can actually reference the right template to auto-create that project. So it would save some setup within the OpenAir system according to what you've set up as far as the integration is concerned. And then project managers, of course, would be responsible for updating any critical items such as dates and budget values that may not have come across from the integration. Reporting is the big thing. Reporting is one of the main drivers for tracking proposals earlier into OpenAir, although there are many other benefits as far as knowledge transfer and handoff between the organizations. But reporting is one of the key ones. And as you can see here, even by identifying the different project stages in a report, it's very easy to sort of group information according to maturity of the engagement. And in this example here, I also have that closure probability showing so I can see how the value is being added or computed into this report so that I can understand, a 30% of something that's coming in at $984 is probably about a $10,000 deal, potentially, spread over time. It's just very immature at this point. So there's a lot of information that you can now include on reports and then, of course, play with reports to be able to see how that impacts and the information that you glean from OpenAir. We've already talked about the dashboard itself, so basically by leveraging some of those custom drop-down fields, you get a lot more capabilities on your dashboard to give you insight into what's coming down the line. So as I go through the summary, I'll open up the phones for questions, but the summary is really our OpenAir system to enhance it and allow that overlap between sales and the services teams to happen, because you'll encourage handoff, you'll encourage communication, and it will give you a lot of benefit on the services side to understand what's coming as it's being identified through the sales funnel. And project managers also will get a lot of benefit from it by being involved in tracking things like risk assessment activities, which are part of many of your standard methodologies going forward. If you have any questions at all, please don't hesitate to contact us at info@topstepconsulting.com. You can certainly visit our website to review any of these items that we've posted. We do record and post all of these webinars for your reference and enjoyment. We also have a Top Steps tweets on Twitter, and the OpenAir users LinkedIn. We share many tips as well as on our website, and announce user groups, local user groups that we coordinate through the US and in the UK. So I thank you very much for your kind attention and attendance, and I hope you have a wonderful day. Thank you.